update. Oh, we didn't go live yet. There we go. Morning Trade Pros. Welcome to Morning Market Update for this Monday, February 24th, 2019. This is George Papazov of Trade Pro Academy. Different angle. You're facing the other way now, the opposite. I had the lights set up on the weekend. I was doing some videos. And so I figured, hey, let's. The shirt explains what happened. I don't know if you could see it. Yeah, you can. The retail bus was full. And so we had some sell stops on the way down on the S&P 500 overnight. Let's talk about that, right? Concerns about this coronavirus outbreak are spread and has spread, pardon the pun, over the weekend. All right, now it's escaping outside of China quite a bit. Italy's quarantined a lot of cities, not cities, areas, canceled a lot of events. All right, South Korea is now seeing northward of 800 cases in total that are diagnosed. And the scary part is that outside of China, the mortality rate is much higher than China reported. They said it was around 3%, and numbers are actually closer to what the SARS was, around 10 or 11. It's still too soon to tell, and I think this is where, oh, my bad, I know the mic cut out. It's because I had it connected to my phone for Bluetooth. All right, it's still at the point where we don't know. It's just spreading internationally or outside of China, so we're going to have to wait to see some more incoming data. But for the time being, it scared the crap out of the market. The S&P 500 reopened on a almost 30-point gap on Sunday at 6 p.m. Eastern. Equity markets are down sharply across the board overnight. Oil is getting absolutely pummeled. And, it's just too many people were long at too elevated levels. It had to come down. The retail bus was full. And so we needed to see some of these sell stops. That was anticipated. We talked about it last week. We said into Friday, I was like, hey, guys, use this as an opportunity to take some profit. You don't want to go into the weekend holding large equity positions because of this. Exactly what happened. There was a significant gap risk. All right. And we also talked that, look, what was going to be the trigger for the S&P 500 to slide? We heard all these cases out of China, all these fatalities, new hospitals being built. But we said, what was ultimately going to be the catalyst to make this thing drop? And what we had agreed upon is that it was contingent on it staying in China, being contained in China. And as long as it was in China, markets were roaring higher. Now it's outside of it, markets are selling off. That's exactly what I'd kind of got you guys prepared for and to be watching out for. So today we started off on a pretty ugly start. We talked about this yesterday in our webinar at 8 p.m. Eastern. So, it can be a really ugly start to the week. We're down into the overnight lows. Things were chugging on a little bit on a stronger momentum since 5 a.m. We did recoup some of the losses, but we're down to the overnight lows on news that there's some more fatalities outside of Italy. All right, Italy had its 8th, I think. Let me see I clipped it here. A 6th person in Italy has died following the coronavirus outbreak. There was a small market recovery heading into that headline, and then the risk-off sentiment reversed once again. So here's how the markets stand for this Monday. Japan's closed, luckily. Hong Kong's down 1.8%. China down 0.3%, not as much. India down 2%. In Europe at midday, London down 3.5%, getting absolutely destroyed for a one-day sell-off. That's huge. 3.5% in one day, all right? Paris down 3.8%. Frankfurt down 3.7%. U.S. S&P is down 2.7%. Dow's down 2.8%. Nasdaq's down 3.2%. Big selling, really big down days. And I think, look, it could just be getting started. The market's been so elevated that we could get a 10, 15% pullback, and we're still in a bullish market. It's just the cyclicality of the market. Markets are fractal, and they move in waves. And when they're elevated and near highs, it's the worst time to buy. You're better off waiting for a pullback. So we're getting a longer-term pullback. The question is, where does it stop? I got some calculations that bring us all the way down to 3,000 even, all right? So to put that in reference for you, we're now through the overnight low at 32.40 half. Okay, so another 240 points lower. It's not going to go sharply and vertical, but be careful. Today's the kind of day that retail's trained to buy these sell-offs. I know a lot of retail traders say, well, if I liked it at 33.80, I like it at 32.40. It's cheaper. It's a discount. Oh, you hit the rim first. So it's discounted. So retail is going to be trained to buy. I'm going to tell you, I stick on the short side early on in the morning, see how much downside momentum we get, and we could then look for some potential long for a fade. You're only fading if you're getting long. The trend is down. Stick with it. Just because you didn't get short, it doesn't mean you have to be getting long. All right. Uh, and whenever you think, hey, it can't go any lower, I'm going to start buying, that's usually the first sentence of a day that blows out your account in a day like today. Very dangerous. Be careful saying that statement. It can go lower, and it will. As long as there's people who think it can't go lower, that means there's people buying. If there's people buying, there's sell stops below. Careful. All right? I'm warning you, today could be ugly. Um, Crude oil, it already is ugly, but it could get uglier. Crude oil is down 3.6%. Get this. Crude oil closed on Friday at 53.5, and it's now trading at 50.78, down almost $3. All right, big drop, down more than 3.6%, now almost 4.5. Gold's up huge, 2.4%. Gold is within 10% of its all-time highs. All right, that were set in 2013, I believe, 2012. Huge upside on gold, obviously, as money is coming out of equities. That money has to go somewhere. So where does it go? People buy gold. All right, people buy bonds. Bonds are sharply higher. The yield is inverse correlation to the bond price. Yields are low. The 30-year yield has hit the low level of August 2019. Remember, that's when people started panicking about an inverted yield curve. So we're seeing some yields lower, just pulling the market down. Keep an eye out on those correlations, gold, bonds, yield, and you're going to know what equities are doing as well. You're going to know what the big money is doing in equities, which tends to precede the trend. All right, Bitcoin's down 1.4%. I think Bitcoin's real test is coming up. The first recession that happens is going to be when Bitcoin is make or break, in my opinion. All right, it could become a cross-correlation asset or a risk-off asset, safe haven, if you will, like gold, or it could just go down with equities. So its big test is coming up at some point. Right now, it's holding ground, down about 1.5% in the mid 9,000s. In today's economic calendar, we have Dallas Fed manufacturing survey at 10:30, and that's it. So we're just trading on technicals and on order flow. And I think downside is the right side. Sell some rallies early on, and if it pops up and some buy stops come out on the U.S. Open, if you're getting long, you're fading. Keep it tight. Take profit quicker. Tighter risk management, less size on those trades. Then when we hit a little bit of a pullback, you get back on the short for the trend continuation. All right, that's what we got for you guys. Love you all. Hope you had a great day. I'm going to put my sweater on now because it's kind of cold. Wanted to debut this shirt. I mean, you guys have probably seen it. It's actually probably the worst design I've done, but the message is kind of cool. We're working on a big surprise where you guys are going to be able to get a chance to get some swag. We've said before that it's coming, but now we're actually working on it. So it's coming soon. Stay tuned. Love you guys. Have a great rest of your day. If you're watching YouTube and you're not a subscriber, please subscribe. Hit the like button. We've got great content. We're live every morning at 9 a.m. Have a great rest of your day. Let's go trade this crazy volatility. Great opportunity for a trading room and a great opportunity for you on YouTube to join the trading room if you have it. These are the kind of days that you got to be trading with someone. If you're in the corner of your bedroom by yourself, be very, very careful, because I'm telling you, there's going to be a tendency for you to get sucked in on the long side as we drop another 40, 50 handles. Be careful. All right? Careful, careful, careful today. If you're alone, do everything small. There's no need to be Hulk mode right now. Okay? Love you all. Have a great rest of your day. Manage your risk, Trade Pros. Let's turn around and answer some comments real quick. Is NinjaTrader the best platform? No, it is not the best platform, Douglas, by a long stretch, but it would work if you have it. Think this has more to do with the repo than coronavirus. I think they're both equal factors. Majestic. I know the Fed's pullback of the repo, and they sounded a little bit more hawkish recently, is contributing. But I think, it's all the factors together. I think everything came in at one point, and people just have to take some profit, which starts out with selling. But yeah, you're right. That is a contributing factor. Thanks, Jamie. Appreciate it. Forex black box. Yeah, we just broke the overnight low as we were chatting. Awesome update. Thank you, Will. Will C. Thank you. Majestic. You have yourself a great day. Marilyn. I know who you are, but we'll go with Marilyn on YouTube. All right, you guys take care. Have a great day, YouTube. Love you all. Goodbye. And we'll see you tomorrow. Sorry that I'm saying bye with my back turned, but we got to get going in the bedroom. Ciao. Thanks, Marky. Damn, those traps are looking proper. Oh, I'm hitting the gym again today. Bye, YouTube.